Good evening, ladies and gentlemen. This is Barry Norman for OptionRally Academy. I hope everybody had a wonderful New Year's Eve, and I'm wishing you all a very successful and exciting trading season in 2014. Hopefully you'll be trading with OptionRally throughout the year, and I'll be giving you classes all year round. Tonight's class is called Getting Started with Binary Options. It's part of our three-part series that's developed for beginning or traders or people who haven't decided yet to trade. There are three parts to the class. We start out with Welcome to Binary Options. After that, we come to this class called Getting Started with Binary Options. Here I'll show you how to use our platform, how to start evaluating trades, where to look for in the Internet to find all the data you need, and also I'll give you some basic trading strategies to get you started. The next, or the last of the classes, is called Mastering the OptionRally Trading Platform. And there I will teach you how to use all the different trading methods and styles, how to find all the information you need on our platform, and how to use all the advanced tools, risk management tools, all the things that we offer to our traders. And you'd be surprised when we come to that class. I have traders who have been trading with us for a long time that don't even know how to use all the different views and screens and where all the data is stored on our website. But I will take you and show you that in the next class. Now, if you decide to become a trader with OptionRally, you'll be invited to take part in all of our education classes. You'll get an account manager. You'll get one-on-one training from a special training coordinator. You'll also be invited to our classes, which include, there's a series of 12 classes. You can take them in any order you wish. They're free of charge. We repeat them every 3 months. You can come to them as you please, whenever you please. Besides that, we also offer special live trading events. Like this month, we're trading the non-farms payroll report next Friday live, where we'll evaluate the markets right before the data is released, decide what we should trade depending on how the data is released, come up with a trading plan for the day, and then we'll stay live while the data is being released and we'll trade it together. We also have the German ZEW report, ZEW Consumer Confidence, which is a very important report out of Germany, has a big effect on the euro. We also do the ECB rate decisions, the Federal Reserve rate decisions, and the idea isn't necessarily to trade these live with me, it's to teach you how to analyze them properly so that you can trade those month after month after month on your own. Then, of course, we have live trading events where we'll get together as a group and analyze the markets, look for an asset that is offering a trading scenario, we'll build the trading strategy, and we'll actually make the trade together as a group. So we offer all of this types of education, plus strategies, plus papers, plus special mailings, all of this to our traders. And it's all available. We don't charge for anything at OptionRally. Education's free, one-on-one training's free, account manager free, our news service is free, our charts are free, there's no commissions, there's no fees, there's no spreads, there's no margin, there's no leverage. Just come trade. And we will turn you into the best trader that you can be. We will do our utmost to make it a successful project for you. Now tonight, if you're here with us, this is the second of the 3 courses, and all the courses are freestanding. So if you haven't taken the first course, or you started with the third course and came back to the first, they're all independent, so you can take any one or all of them in whatever order that's comfortable for you, whatever date and time works best for you. Now, most everybody in the market today are asking one big question: where can I make fairly safe, profitable investments with low risk and small amounts of capital? Well, if you're here with us today, you probably have figured out the answer, but the answer is pretty easy: trading binary options. Okay? And if you've made the decision to trade with us, it's probably one of the first smart or great decisions you'll make in 2014. Now, today we will learn how to use the OptionRally platform, and I'm going to take you over and show you how to make money using this platform. Now, in all the classes, I will keep reiterating to you over and over and over again that the most important thing when you're trading binary options is remembering the simple little steps. You start out with an asset. You determine if that asset's going to go up or down. You decide whether you think that'll happen now or later, and you decide how much money you want to invest. In advertising or marketing, there's a saying that's keep it simple. Keep us simple stupid. Keep us simple dummy. It's always what we're saying, because if you make things complicated, people don't understand them, and you scare them away. The fact is, binary options is one of those things that is simple. The physical steps, the actual steps in entering a trade are simple. When you try to overcomplicate them, that's when you'll start to make your first mistake. When I train a Forex trader that's been trading for many years and try to tell them, don't look at that, don't look at this, don't get involved in this, don't count pips, they have a very difficult time grasping this, because they want to know how much money, where they have to sell a trade or close a trade to make profit, what their risk is, where they can protect their risk, how can they double their money, how can they do this, how much profit are they going to make, how many pips does it have to go up to make that profit, how many pips does it have to go to cover their commissions. None of that holds true for binary options. So if you keep telling yourself what I need to do is find an asset, determine if it's going to go up or down, that's the hard thing. But because we're trading in a very small, narrow window of time, it's fairly easy to decide if something's going to go up or down in the next 15 minutes. You're not deciding where it's going to be a month from now. You're not deciding where it's going to be the end of the day. You're not necessarily deciding where it's going to be tomorrow. You're deciding where something's going to go in the next 15 minutes to half hour. Now, how complicated can that be? And then, lastly, when you make your investment, the total dollar number you type into your computer screen is the only risk that you have. There is no leverage. There's no margin. There's no hidden smoke and mirrors. There's no fees. There's no commissions. It's not like trading in the Forex market or the commodities market where you're putting in a premium or a deposit to tie up a huge amount of assets. I mean, people come back to me. I hear these stories all the time. I opened up and I decided I was going to trade in the commodities market, and I put $500 in the account, and they gave me I wanted to trade oil, and I put down $200 to tie up a contract. I was tying up 1,000 barrels of oil, and oil fell 50 cents, and I was out my $500 before I even started. Yep, because the $200 is only a deposit there. You have lots and lots of risk. Not in binary options. Whatever number you type in the screen is all your risk, and you also know your exact to the penny profit before you ever make a trade. You know your risk and your profit before you ever start trading. Now, on the OptionRally platform, you can trade a variety of assets. You can trade currencies, which are known as Forex. That's the monies from all around the globe. And up until recently, it was only money issued by a government. Well, now we have Bitcoin out there, so nobody's decided where it fits because it's a digital currency. It's not backed by a government. And some people are putting in commodities, some places are putting in currencies. It's still undecided, but it is considered a digital currency. So you can trade it on the OptionRally platform, and it's under currencies. Then we have commodities. Commodities are easy to define. They're things we can consume. Oil, gas, gold, silver, platinum. What comes after that? We have cotton, wheat, corn. We have all kinds of agricultures. We have pork bellies. We have all kinds of livestock. But we don't trade those on binary options. We trade only the commodities that are traded in the international markets, because you have to trade you can't trade commodities that have varying prices based on region. So we trade the commodities that are covered by the London Metals Exchange, the CBOT, the COMEX, the NYMEX in the U.S. Then we have stocks. Now, in the global markets, there are thousands and thousands and thousands of stocks. First of all, you can only trade stocks on exchanges that are open during open functioning hours. So in other words, if you wanted to trade Facebook, which just moved to S&P, and it's traded in New York Stock Exchange, you can only trade that during New York trading hours. So it's only when that exchange is open. So those vary depending on the exchange times. And because we couldn't list those thousands and thousands of assets at one time, nor could we handle it with the risk management. And a lot of these stocks don't move, don't budge an inch. Well, when you're trading binary options, they have to move so that you can make profit. And they have to move in small time frames. So it's important. So we offer all the big stocks. So you're going to find during U.S. trading, everything from IBM, Facebook, Google, Twitter, all the ones you'd be interested in. Bank of America's there, JP Morgan Chase, all the big corporations are available to be traded. Lastly, you can trade indices. Some people I'm American, so I call them indexes. But they are like the S&P 500, the DAX, the FTSE. These are groups of stocks or baskets of stocks that have been put together, and the value of those stocks put together has a total value and a number, and you can trade them going up or down. But you can trade all of these in binary options. Now remember, you start out with these simple little steps. Pick an asset. That's the first step you got to make. You got to decide what you're going to trade. You decide if it's going to go up or down. You decide if this will happen now or later. And you decide just how much you want to invest. Now or later gets a little bit confusing to people. Now or later, 85% of all trades in binary options are done in what's called the now, which is the next expiry, which can range from 15 minutes to an hour from now. It's popped up on your screen. I'll show you how to find it later. But it's the next slot of time in which you can trade. But you also have choices of a lot of time slots. And this is when your trade ends. And we also have long-term trades. So you can pick the end of the day, the end of the week, the end of the month, the end of, well, we just started New Year. So you can take all the way up to June of 2014. Now, you say, why would I want to do something like that? Well, hypothetically, let's say today gold skyrocketed for some stupid reason. Now, it's up pretty high today, and we know gold's going to go down throughout the year, but the market's repositioned. But say for some reason something happened to push gold all the way up to $1,300 today. Well, that's a very high point for gold. We're not sure when it's going to ease down or how far it's going to ease down. So we could decide, you know what? We know when the Federal Reserve meets in January and they continue tapering, gold's going to go way down. So we can decide to trade gold today at 1,300 to close after the Federal Reserve meeting in January, and all we have to do is decide it's going to go down. We don't care how far down it goes. Okay? There's no such thing. There's no difference. So gold ends up dropping all the way down the end of January to $1,299. Or gold goes all the way down to $1,100, you still make the same amount of profit. All you're deciding is if something's going to go up or down. So there are many times, like when oil was trading over $100 last week, we knew it wasn't going to stay up there that high for that long. We could have traded to go down in 30 days from now. We know it's going to be much lower after 30 days from now. So there are many reasons why you would take later. But otherwise, as a beginning trader, the easiest way is to take the now. It's the easiest time to make a decision, and I'll show you today how you can get that now down to about a 5-minute segment. You can watch it and just trade it right before that trading range is about to close, and you can get there and only have a risk for 5 minutes. Well, how difficult is it to decide if something's going to go up or down in 5 minutes? Okay. So there are many easy ways to trade binary options and their profit. And remember, you know your risk before you make a trade, and you know your profit. So I'm going to take you over to the OptionRally site right now, and I'm going to show you some of these things before we go over and tell you how to apply them and how to start figuring out how to make a trade. Now, I understand tonight none of you really know how to actually trade in the markets. So we're not going to be really talking about how to make the right decision if something's going up or down. I'm going to show you just how easy it is to enter a trade. The hardest part is deciding if it's going to go up or down. That's the most difficult thing. So once you know how to enter a trade, then you can go up to the difficult decisions. So let me take you over to the platform. Give me 1 second to pop it up here on the screen. Okay. It'll be up on your screen. There we go. It's coming up there for you right now. There we go. This is the trading floor at OptionRally. Now tonight we're going to take a hypothetical currency and take a look at it. So the first one of you guys out there in the audience, if you type in what currency you wanted to take a look at tonight, we're going to, currency or commodity, we're going to take a look at it, and I'm going to show you how to enter a trade, and we're going to take a quick look at it on the site. Okay, I've got a whole bunch of people out there. Somebody just type in what currency, what commodity. All right, well, I guess it's going to be oil because that was the first one that popped up on my screen. So we go over to the asset selection bar. We're going to scroll down through the commodities, and we're going to look for oil. Okay. When we click on oil, we see the screen change. We see the can of oil on the left-hand side. It says, will oil for February 14th go up or down? Now, February is the next futures month, because that's what's that's what we're trading in now. So you're always trading in the upcoming month's market. It's not that very important, but you'll have to know. What we're looking at now is today's chart, actually the last couple of hours chart for oil. We can see oil has steadily come down today. It's down at 96.16. That means oil has dropped over $2 today. I mean, I think the oil last week at the end of the year was trading just over 100. It came down just to drop underneath. Yesterday it was trading to 98, mid 98 range. So we can actually go back on the charts. If I click on our charts are adjustable, so I can go back and click on 12-hour chart. I can go back and see this morning when it opened. Here's where it was trading at this morning. It was trading at 98, 99, almost $99. 98. Here it is, 98.909. It was trading at this morning. So it stopped 98.909. It is down $2. That's a big drop for oil. Now, we knew why oil was going to drop, because oil was well overstated, plus Libya has now resolved their issues. They're going back into production. Sudan's kind of mellowed out, and they've got a peace agreement. So everything's back in hunky-dory in the world of energy speculation. So oil has dropped down. Oil should be trading in the $94 or $95 range. That's what I'm saying. Last week when it broke over 100, we could have traded it going down because we knew in a week or a month it was going to come back down, because all of that, the Libya stuff, the Sudan stuff, the Syria stuff was all, if it doesn't go away, it becomes normal and the markets just get used to it. Okay. So here we've got oil. Oil is trading right now at 96.1252. We see the price of oil. We can see how it's traded today. We can click over on the 30-minute chart and we can see where it's been trading. Now you got to see these views are for very specific reasons. What we're seeing now is what oil's done since 1750 this evening, just in the last half hour. And we can see oil was trading all the way up here and this nosedive. Now this looks like it's a big nosedive, but it's only from 96.42 to 96.05. So it is a 40-cent drop, but oil's cascaded all the way down. We can see the trader's choice bar down here at the bottom. It tells us 49% of the people trading oil right now think it's going to go down. 51 think it's going to go up. Okay, so we've got oil. The next close is 18:30, which is in 11 minutes. And say tonight, for ease of sake, we're going to invest $100. It tells us right away we're going to get back $175. See where it says potential payout? Here, I'll circle that for you. Okay. It says potential payout, $175. It's our payout is 75%. We only have 16 seconds to enter this trade in this expiry, and this is how you get it down to a very close range. So we think oils can go up. We're going to click on up. We're going to apply it. We've processed it. We've approved that trade. Now what we did is we got in a position. You can see it down here. Our open position will fall on the bottom part of the screen. Okay. So we can see that we got an open position in oil at 96.050, 96.090. We said it was going to go up. It's called a call. It's going to close in 11 minutes. We've invested $100. If it pays out, it's going to pay out $175. Okay, and we have that, our particular trade. If we want to watch our trade very closely, we can click on this little bar chart down here that says chart and open up a screen down below, and that's going to give us a chart that's only our trade. What we're seeing there is our trade, not necessarily the price of oil. Well, it's the price of oil, but it's where our trade is. See, when we see red, means we are out of the money. When we see green, means we are in the money. So oil ticked down a little bit, but we don't care how far down it goes. As long as it's 1830, it's above what we said. Okay, and that is exactly how simple it is to make a trade in binary options. It's a very uncomplicated process. 4 steps. Okay, we pick the asset. Let me get my pen back here. We pick the asset. We pick the expiry time, or it automatically will default to the next expiry time. We type in the amount of money we want to invest. We can see our payout. We can see the profit percentage. We can see the last minute that we can open that trade at that time zone. We can see the current market amount. Okay, and we can see the trader's choice bar, what all the traders are doing on this. Once we've opened our position, we can then come down here and see our position open on the charts. Okay, and we can monitor it there. And no matter where we go, as long as we're on the trading floor, that position will be open on the bottom of our screen so we can keep an eye on it and see what's going on. Let me erase these drawings. And so right now, as long as that position is open, it will remain on this bottom bar. Once it closes, it just goes over to the expired position. So we don't have to be here watching. We can come back later. Okay, so we're going to go over and we're going to make a trade tonight in the euro also. So we're going to sit here and let's go over and take a look at the euro, see what's going on with the euro dollar today. It's been falling steadily. What's happening is the traders are coming back from holiday. Today's a little bit difficult day to be trading because the traders are coming back from holiday. You have lots of people who removed themselves from the market because they just didn't want to be stuck or worrying about stuff over the holidays. You had some people who moved to safety, some people that were chasing risk assets last week and pushing the equities market sky high. They pushed the equities sky high, took their profits, sold out today as markets were high, and have come right back into the commodities and the currency market. The equity markets took a tumble today for no other reason. It's just the positioning because the big traders needed to show all the profit they could midnight on December 31st. Okay. Now they're going to start taking positions to make profit later in the year. They can lock things in now, and they're just coming back into the market and redistributing where they were. Okay, so what we're looking at right now is the euro US dollar. We're looking at it currently. We can see that it is trading at 136.725. It closed the year out just shy of 138, so it's way down also today. And again, it's more or less for positioning. Nothing seriously happened. We had some data out of the Eurozone, but not enough to skew up the markets. So we can see that if we look at the daily chart, we pushed it out for 12 hours. Okay, what we see is since 7 a.m. this morning, the euro has steadily dropped. It's recovered a little in the U.S. session here, but it's staying pretty much at this 136, 137 level. And it's been moving actually almost in a small trading range since 4 o'clock this afternoon. Okay, so we've decided we want to trade the euro. We think it's going to continue going up at 1830, which is in 7 minutes. We have 40 seconds to make this trade, so we're going to go pretty fast here. We're going to enter $50. Actually, let's go back and make it $100 tonight. It's going to pay out $181 or $18. We're going to say it's going to go up. We're going to put an apply. We're going to approve the trade. And we got our position in, and we can see it's now open down the bottom scale. We can see that our crude oil is still going. We can see the euro still going right here. Now, this countdown bar tells you how much time you have to enter that trade before this expiry is no good. We can see the euro. We could have just moved it to 1840, 1815, 1900, 2300. There's many expiries available to us. The fact is, when you can close that window and shorten that window down, that we have this expired from 1830 and it is 1824 now, we only have a 6-minute risk of exposure. So it's easier to make a decision if something's going to go up or down in 6 minutes. Okay, so it's a little bit easier to make that choice. So we have two trades out here. We have the euro US dollar, which we're in the money at this moment at $181 profit, and we're looking still at crude oil. And we are still out of the money. It's still dropped down a little. It hasn't gone far away. We'll still should end up in the money on crude oil. We're just about even there. Crude oil's moved since we entered the trade, not even a penny. So we have ample time. It'll come back up. But that is how simple it is to trade binary options. It is a very, very simple process. Okay. And that's what makes it easy. It's not complicated. When you go to a Forex trader or you go to a commodities trader and you got to download platforms or even online trade, the reason they give you demo accounts isn't so you can learn to trade the commodities and the assets. It's so you can learn how to enter a trade on their platform and their system, because there you're dealing with high risk, high stakes. If you don't enter the trade exactly right and you don't protect yourself from risk and take profit points in, it isn't like binary options where once you've made a trade, you can sit back. No, once you've made the trade, now you have to get all the other parts right. Because just like with crude oil, if you thought crude oil was going to go up later in the week, but you bought it now, and it dropped down to $2, your broker's calling you and they want you to deposit $2,000 in your account to cover that trade, even though you haven't closed it and hasn't lost it yet, as long as it's going to as long as your asset has gone down in value, you've got to keep that broker even. So he's going to be calling you to put that money in your account. If you don't have that money to give him right away, he's going to close your trade. You're going to owe him $2,000, and you're going to be miserable. Doesn't happen in binary options. Binary options are quite easy. So now that you see how easy it is to actually enter a trade, let's talk about how you make a decision as to what you trade. So hold on one second. I'm going to bring you back over to our PowerPoint and try to get this up here correctly. Okay, there we go. Now, there are several easy beginner ways to trade binary options, some that you probably never thought about. Trading the news. Now, there is a saying in the markets, if you've been around for a while, those who trade the news are nuts. And that holds very, 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 very true. Because the news is most of the time wrong, most of the time causes people to jump in the market and react or overact, and the news isn't detailed enough for a trader to understand exactly what's happening. For binary options, it's a dream. Okay, and we'll go talk about that in a minute, but why it is. Then we have trading what you know. Many, many people out there don't realize that their knowledge of what's going to happen in the markets, they already know some secrets. And once you start trading, you'll start looking around and start trying to figure them out. I mean, if you work if you're a real estate salesperson, okay, and you realize that the foreclosures are disappearing and that housing prices are starting to edge up, and you're starting to get more activity and more calls with buyers than sellers, guess what? You know the housing market's improving, and you know when that data is released for whatever country you live in, that mortgage data or that home sales data will be improved. And what's going to happen is that doesn't mean the economy is getting so much better that the currencies can go through the ceiling and the world's going to be great. But what it does tell you is the day that data is due to be released, it's going to be positive. And for that day, if you live in the UK, you know that day when that housing data is released, it's going to help the pound that day. It won't help it for very long, but it'll help it for a couple hours or that day. Okay, so you know something that other people don't know. If you work in transportation and you're to work for a delivery company, all of a sudden all the people that got laid off at your job are getting rehired, and they're also offering overtime again. Well, what do you know? You know the jobs market's coming back, so you know when the jobs data is going to be released, it's going to be positive because you know it firsthand. Okay, there are things, if you work for an automobile dealership or you do something in the automotive industry, and all of a sudden you see the car dealership is busier. There's more customers. You're getting more sales. You're not sitting there begging for a customer, and the people are coming back into the showroom. They may not be buying it, but they're starting to look. Well, that means the consumer confidence is increasing, and you also know that auto sales will be increasing. So that helps you trade. So sometimes you can trade what you know. Okay. Now, trading what you know also means, okay, not just because the dollar is going to go up when the consumer confidence comes out. You work for a car dealership and you know GM's about to make a statement or their quarterly earnings are going to come out. You know GM's going to go up because GM's got sales going up because their dealerships are busier. It's all things that you can figure out based on your own knowledge. Then there's trading the economics counter. We're going to look at that very shortly in detail. Trading resistance and support, we're going to look at real closely, but that's a whole hour class we offer you. And then trading herd psychology. Herd psychology is a wonderful thing. The markets are like follow the leader, or imagine a herd getting ready to stampede. With binary options, you don't need to be in the front of that stampede, and you don't want to be anywhere near that rear. But once you know that the stampede has started, all you want to jump in is to go in and take a 15-minute segment of that movement and make your profit and get out of the markets. You don't want to keep trading over and over. You don't want to start chasing the market. But when you start seeing this herd psychology push in there and you start seeing gold will go up because something will happen. But then what happens the next day and the next day and the next day, gold keeps going up. And for a week or two, it'll climb because all the other crazy people are just jumping in the market behind. They're following the herd. Okay. Well, you don't need to follow the herd. You just need to see where that herd is stampeding and take that little bit of trade and make some profit. So these are many ways that you can make profit trading in binary options. Now, talk about buy the rumor, sell the news. Trading economic events or news trading is one of the oldest trading systems out there. And if you've never heard the expression buy the rumor, sell the news, then you're probably just starting your trading career. And you will hear it many times. But those who risk their money on the news are nuts. It's those who figure out how the markets will react to the news and trade those reactions are genius. Now, due to the simplicity of binary options, this is a great way to trade and to make high profits. This may seem too simple, but it works. News, rumors, statements, or just plain old gossip have an effect on the markets. It doesn't matter if it's correct, the source is more important, and the actual day is even more important. When there's very little action in the market, news flow tends to elicit huge reactions. Like last week before the New Year's holiday, I mean, Monday the markets were dead. There was no data coming out. There was nothing anywhere happening, and traders were just itching to trade. So they were following the news, and whatever news came out, they would overact and overreact to. Okay, why did Sudan have such an effect on the oil market last week? Because they were distracted. There was nothing else to distract their view, so they were just jumping. They're itchy. Okay, so you can trade the news. Now, rumors and denials are just a great thing to trade also. And sometimes you just have to sit back and apply common sense. Now, what just happened, what happened a couple months ago now, but it just happened recently. Okay, it's an event that happened in the news that we all saw day in and day out, the front pages of the newspaper. All of a sudden, out of nowhere, President Obama has a friendly word with the new president of Iran. I don't even remember where they ran into each other. I don't know if it was a state affair, if you know. The UN, and they were actually for the first time said hello. Now that broke the ice. Well, before we know it, a week or two later, we had diplomacy going on, and we had negotiators sitting down between the PES-5 or the Western Allies and Iran, talking about easing sanctions and opening up their nuclear, arsenal to the world, or seeing what's going on. Well, nobody thought anything was going to happen. We've had lots of over-the-time negotiations back and forth, but never at a high level and never endorsed by a president. Okay. So, all of a sudden, out of nowhere, we started hearing rumors that there might be a deal by the end of the week. Okay. And then after that, no deal. The guy from the Iranian negotiator went back to his capital. Everything was off the table, but they were going to come back on Thursday and meet again. Okay. In the meantime, on Friday, President Obama came out with a statement endorsing the negotiations and endorsing some type of a diplomacy and the easing of sanctions if the terms could be reached. Okay, then all of a sudden, the meeting went on again, and nothing happened. We thought there was going to be a deal. Thursday came and went, and there was no deal, and everybody said, that's it for the time being. And, the world went back on its little way. All of a sudden, Saturday at midnight, a deal was announced that we were going to start on Monday easing sanctions against Iran, opening up, financial resources to them, insurance resources, keeping to a minimum their crude oil exports at the old levels, but allowing them some easing so they could continue. And on Monday, it all happened, and it was like a flash in a pan. But now, if you're looking at the chart that I put up with you, this is crude oil. Now, of course, with Iran, the most important thing in this was affecting crude oil, because they're pumping more oil into the markets, and they're able to supply the few countries that the sanctions allow them to supply. Those countries now can stop buying from other sources. So the first rumor of the first meeting and the end of the first meeting with no deal saw crude oil peak at the top again. Then when the deal went, possibility of meeting again, and President Obama came out and said something, crude oil fell all the way down because it just meant a bigger supply in the markets of Brent oil out of Iran. When they announced no deal, the price of crude oil climbed back up. Now, this looks like huge, steep climbs on this chart. But if you notice, the whole range went from $92 all the way up in this period up to $95. So the whole range was only $3, but it was tradable. Okay. We can see after the no deal, okay, we see that crude oil crude oil here at number 1 climbed back up. We see then when they announced the surprise announcement, we see this continuous drop all the way down. Crude oil dropped all the way to $92. Okay. So all of this was based on the news as these negotiations were going on, and this was over a 2-week period of time. You can see the dates across the bottom. Once the deal was over and done with and forgotten about, this is the end of actually January 1st, the markets went back to normal. Crude oil went back to past where it was, went all the way up to 97, actually broke above 100. Now it's back down to 95 today. But this was just a reaction all to that news out of Iran. And you could chart it day by day by the headlines. Well, you could have traded that. You could have traded for high profit. The minimum of Mr. Obama came out and made a statement. We saw crude oil go down. The minute they said no deal, crude oil went up. The minute they announced the statement, crude oil went down. Very, very simple. Not too complicated. And these things happen over and over and over again. It's just you have to learn how to look for them and how to trade them. Okay. This is only one simple example. Another one we call the Ben Bernanke strategy. Whenever Mr. Bernanke speaks, gold and the U.S. dollar and the euro react. And we have a whole class on trading Mr. Bernanke. Okay. Now, it'll be Miss Yellen after January. But this is every time the Federal Reserve, everything the Federal Reserve does is timed down to the minute. We know exactly when a report's going to come out. We know when a statement's going to be made, when a speech is going to be made. Okay. And the markets prepare ahead of for that speech, and we don't need to know what the markets are really doing. We don't even need to know why or what's expected to be said. All we have to do is see that, in this case, we see gold being pushed steadily down to 2 o'clock, and the FOMC minutes are released at exactly 2 o'clock. We don't know exactly why the markets were pushing down gold. I mean, I could explain it to you in detail if you want to. But once you see that the day to day and a half before is getting steadily downward, it's going to continue climbing, going down till the report. The market's not going to reverse itself before the report. And then when you don't want to be anywhere near the markets when that report's released, then you can get back in after the report. But you want to understand, you can trade these things without actually understanding what you're trading. And this is called trading the combination of trading the economics counter and trading the news. But we'll teach you this strategy. Like I said, we have a whole class on the Ben Bernanke strategy. But these are easy, simple ways to trade. Okay. Again, you do not trade the results. You trade the trader's actions. Okay. Now, the best of the best, especially for beginning traders, but I trade the economics calendar. I live with the economics calendar, and I trade it all the time. It's called trading the economics calendar. The economics calendar is a tool used for fundamental analysis. Now, fundamental analysis is the easy stuff. It's analyzing it based on reports, data, news, information. It's technical analysis that uses all that complicated numeric values. Okay. Now, an economics calendar gathers together in one place all the economic events around the globe that are happening every day. And you can see when they're happening each day, each week, each month, and you can see them way, way, way ahead of time. Because you don't want to be trading anything without looking at the economics. If you looked and saw the euro was going to, you decided the euro was going to go down, okay, and you didn't look at the economics, see that Mr. Draghi was going to come out and make a speech in 15 minutes, well, you could have lost all your money in one fell swoop because you didn't look to see Mr. Draghi was going to make a speech and he was going to push the euro up, and you thought the euro was going to go down because all of your other indications did. So you should always be looking at the economics because it lets you know what's happening all around the marketplace. Now, it's a great tool for trading, and lots of people trade this all the time. Now, on the OptionRally platform, we have a economics calendar. They're also available from FX Empire, Forex Factory, FX Street. There's many out there available. They're all free of charge, and they're all the same. The only basic difference is between one chart and next. Now, what you're looking at on pop-up machine is just a screenshot of what we have on our website. Okay. Now, The only difference from one to the next is graphic depiction. Okay, filters and usability. So you can pick your chart, your economics counter from wherever you're comfortable with. For instance, the one at forexstreet.com, they're a media company, a news company. Theirs has incredibly great filters. If you want to filter down to individual countries and individual regions, they offer a very, very fine filtering system. Okay. Now, my preference is, and we're going to go there, is the one at Forex Factory. Again, they're all free, and they all do the same exact thing. They have the same numbers, same data, same everything. It's not that one is better than another. You have to find the one that fits you personally. Okay. So let me take you over to the... Okay, so I'm taking you over to the one at Forex Factory. Now, I've already filtered this. Okay, now an economics calendar, and we have an entire class, a 1-hour class on economics calendar. Okay, because the economics calendar tracks not just today's data releases. It gives you the previous data releases, when the particular data was released. It gives you the forecast of what the markets expect today, and then after the fact, it gives you what has actually occurred. And today, because of RSS feeds and the incredibly great internet, you are now on an even keel with all the professional traders. When I started trading 40 years ago, we couldn't get this data. Okay, it came out through ticker tapes to somebody who had a ticker tape machine. And so if you were a broker or you were a big hedge fund, you had all this. I'd get as a trader days later, or I have to have friends who could give it to me, or I'd have to have other sources, and it was a nightmare because you couldn't compete with the big guys because you just couldn't get the data fast enough. So we usually traded using technical analysis because we could trade from the charts and not from the data releases. So when they were going to release, and I traded agriculture, so when they were going to release the crops and the crop yields, everybody else was trading, pushing prices up because they said, soybeans are going to have a low yield this year. So the price went up. By the time I found out about it, the price was already higher than it should be. So today, you get all of this data as fast as everybody else does. Now, what happens with the economics calendar is the right-hand column gives you the previous. The center column gives you the forecast of what's expected. And then when the results come out, now in this particular calendar, about a minute before the release, you'll see a circle spinning in here. And when the data is spit out, it comes right up here right away. Now, there are some reports, okay, that are from private organizations. Like up here, we see the manufacturing PMI. That comes from a company called Marquette. If you subscribe to Marquette, you will get this data before it will come to the economics calendar, but only by 60 seconds. For binary options, we could care less. Now, if you're trading Forex and you're trading big dollars, you need that information at the same time the big guys get it because you're counting pips. You need to get in that market at the lowest or the highest point. Okay. For instance, like the ISM manufacturing PMI, that's another private company. But when we see unemployment claims, that's released by the government. You get government figures are not released anywhere any faster. You get them at the same time as everybody else does. Now, I have already filtered this calendar down. If I hadn't, you'd see tons and tons of events. Okay. Now, I could put all of these events back on the calendar and show you just how much was coming out. But for tonight and for binary options, this is all the events that happened for the day. You'll see it pop up on your screen in a second. Okay. Now, for binary options, what we're concerned with is what's called the top tier events or the high impact events, because those are the events that are strong enough to move the markets. They're strong enough to make an asset move. And with binary options, what you're trading is, I'm sorry, I marked something off here. Hold on one second. Today, there we go. So what we're concerned with binary options is events that have enough, that are important enough that will give an asset movement just for a short period of time, because we know exactly when these data releases will occur, and we want to see if it is strong enough to move an asset for a period of time. So today, I've already done some charts for you on The first line across the top. This is top tier data. See, red tells us there's a high impact expected. At 9:30 this morning, the pound would be affected by the primary currency be affected. This is manufacturing PMI. PMI is Purchasing Manager Index. It's a very important report. If you're a new trader, you won't know exactly what this report means. So you can click on the detail box and it'll open a window and explain all of that to you. Okay. Every calendar, no matter which one you use, has something that will open and give you all the detail of that report. Now, if we go to the right-hand side, the previous was at 58.1. Okay. The forecast for today's report was at 58.3. The report came in at 57.3, which is a 1% downward or miss. Okay. Now, with PMI, just a couple points in either direction is enough to make a big difference. Okay. So what we have to do is we have to look at this and say what area around the forecast would be market neutral, what area above the forecast would be market positive, and what area below the forecast would be market negative. So we could have said in this case, hypothetically, anything below 57.5 would have been a market negative, would have been pushed on the pound. Anything above 58.9 or 58.7, and you would have done this by doing some analysis, but it's very easy to find the ranges and set market plus, market neutral, market negative, okay? Because we're not trading on that. What we're doing is we're making our hypotheticals. We're making our trading plan. So in this case, we would have said from 57.5 to say 58.8 was market neutral. Above 58.8 would have pushed the pound up, and below 57.5 would have pushed the pound down. Well, since we're not trading ahead of this result, okay, because we have to wait for the actual to happen, and we are not going to be the market dictators. We're going to follow the herd. Okay, what we want to do is be able to jump into the markets after this report has had come out. We want to see that the markets are doing exactly what we expected. We want to give it at least 15 or 20 minutes to see if it's got enough to keep the momentum, pushing it in the direction we thought it was going to go. Just because it's got momentum, if it's doing the opposite of what we thought would happen, you don't go in the market. Okay. Now, I'm going to bring up back my PowerPoint because I pulled up these charts for us before class, so I've got them ready for us. So let me get back to the PowerPoint. And let's take a look at what we got here. So let's give it a second to catch up. So we can see this report. This is today's release. This is what we had in actuality. Okay, now this is the pound trading on our website, and our website's live feeds. Early this morning, it was released at 9:30. So here's the chart at 9:30 this morning. The pound is trading up here at about 165.582. What's happened to the pound ever since that release? The pound has steadily gone down where it's trading just a little while ago at 164.361. So since that release, and that was the only piece of data due out today, the pound has steadily fallen. So I'm going to show you a more detailed chart from FX Empire. Okay. And now we're looking at a 30-minute chart, and this chart is from this morning. You see this starts at 9:30 a.m. And look at what happened to the pound from the data release. This is just what happened today. So if we would have sat there before this release, done the analysis like we did, wait for that release number, saw that the markets had the momentum over 15 or 20 minutes to carry it down, we could have entered that trade for a 15-minute trade and got out, because we don't know what's going to come up next that will turn that asset around. Like if something came out in the U.S. that turned it around, some press came out. So you don't want to be trading it in there forever, and you don't want to just come in after the fact. If you're watching that release and you can see a 15 minutes that it has supported your belief that it's going to go down because it's built, what that means is those stallions at the beginning of the herd have started to run. The rest of the herd has turned with them, has started to move. Now you need to know that it's started into a full stampede, and you need to be out of there before they realize that they're end of a cliff, or the head stallions just stop, or the cowboys turn them around, whichever it may be. So you need to get in there when that stampede is now starting and get out of there before it even starts to run out of steam. Okay. Now this happens over and over. I didn't pick this today because this was an easy route to show you. I picked the first top tier event that happened today, and is today's data. I mean, this is the only way I can show it to you, but it's what happened today. And this happens over and over again. But we have an entire 1-hour class on trading the economics calendar. Okay, it's a great way to trade, but you have to make a deposit and become a depositor and trader with OptionRally to attend those classes. And if you're not, the best thing to do is contact sales, or tomorrow somebody from our sales office will get in touch with you and open an account. And you don't have to actually trade. You can use what I call observation, validation, verification, and practice and practice and practice. You just have to open an account to show that you actually do have intentions, and then you can attend all of our weekly education classes to become the best trader you can be. And on that note, I'm going to say goodbye to everybody and wish you all a great trading 2014. I hope you all have a lot of success this year, and I hope to see you in my other classes. Thank you very much, and have a great night. Bye now.